All right, so today we're going to put Bob in the hot seat a little bit and have him answer some of the most burning questions we get on nearly every call with prospective members.
When we set up the plans, we are preparing for an audit. He is creating every single strategy that gets put into place. Bob's mind is, I need to present in a court case against the IRS. So better than being there with you in an audit, if it ever were to happen in that unlikely event, we've done it already.
A lot of times when you bring on a CPA, you're new to practice. And all of a sudden, 3-5 years later, you're making more money, you've got more stuff, and your CPA or your tax professional is still doing the same thing they did 5 years ago. You're not the same person anymore. Why should you have the same thing done? Your plan should evolve with your evolution, and your plan should force you to evolve with your evolution.
We talked in a previous episode about fear and how oftentimes we let that hold us back, and just about the skepticism that kind of comes with the territory in the financial industry. So I picked the 5 questions that we get the most. And just to set the stage a little bit, in these conversations, we're having a lot of them. Most of them are doctors, since that's who we primarily work with. And they've come to us because they have a tax problem. And so we try to make it as easy as possible to show them through our cash flow recovery how much they're overpaying and how much they could be saving on taxes. And we show them that the number is usually pretty significant. And so when we start talking about the strategies that we would implement on their behalf, that's when a little bit of the doubt and the fear comes in. And we do our best to ease that fear and talk about the success of our members. But still, there's this something holding them back. So I'm going to share these questions that I get all the time. And Bob, I look forward to hearing your answers. So let's jump right in with number 1, which is asked on every question. Won't it increase my audit risk if I'm suddenly paying less in taxes?
If you weren't doing anything other than paying less in taxes, yes. Let me explain. We don't just go onto the tax form and just eliminate income and therefore lower taxes. We put in place and it sounds like a kind of a curt response, but the reality is that's the only way you could really cause a triggered audit, is all of a sudden you're just doing something illegally, you're being deceptive, you're being a liar, and nobody likes that, even in our own personal relationships. So why would we think the IRS would be okay with that? No. But in the planning process, and this is why we start with the cash flow recovery, this is why we go into the discovery, and this is why we go into the planning process of, hey, you have income that's flowing down to your personal tax return that is creating taxes. What if we were to redirect that income based on the IRS, how the IRS communicates, based on how the legal system communicates, and based on how accounting communicates to us? And what if we were just to redirect those funds in a different area that resulted in a lower tax liability? And so it's kind of like farming. I love farming, and using farming as an analogy is that early farmers, and even today when we actually know how to control flow of water, but in the early day, you're out in the middle of nowhere. Where did they always farm? Next to running water. But it was already running water in the direction. So what did they have to do in order to get that water redirected into land where they want to grow crops? They entrenched a little hole in a trench to redirect the water. That's what we're doing. We're creating a little trenching to redirect your cash flow into other areas so your other assets can grow. And based on how we do that, dictates what your tax liability is. So yes, if we're lying, cheating, and deceiving, which we're not, because though I like the color orange, I don't think it looks good on me in a jumpsuit. And it says short-term business plan, and I'm here to make a bit long-term business plan. I'm looking to bring on members and have long-term relationships with the people that we work with.
That's great. So a bonus follow-up question to that gets asked a lot too is, okay, but if I do get audited, what role do you play? Are you like, peace out, good luck? Or are we like, what role do we play in a potential audit?
Yeah. So in the traditional tax model that you probably are experiencing with your current CPA is they don't have the experience in an audit. And the reason being is because they don't do anything that would require an audit. They're boring.
Mhm.
They're vanilla. I mean, they're not even vanilla ice cream, or they're like literally vanilla extract before it even goes into ice cream where it's sweet and you enjoy it, right? It's just literally vanilla liquid. It's just boring. They're not going to do anything, which is why you're upset, which is why you're dissatisfied with the taxes that you know you really shouldn't be paying, that there should be planning going on, but it's not happening. So yes, we back up the work we do. And in the planning process, and you'll find this out, is that everything we do, there's documentation and proof and evidence of why we do what we do. So it's kind of like those courtroom cases or those TV series where you have lawyers fighting on either side, and one lawyer says, you got to send me all the evidence and all this kind of stuff and discovery, and all of a sudden there's wheelbarrows full of boxes of files, right? Mm-hmm. That's what we do. We're creating wheelbarrows and boxes of files. So as proof of here's what we're doing, why we're doing what we're doing, here's what the accounting says, here's what the legal system says, here's what the tax code says. That's why we're doing it. So yes, because it's very easy because we've done all the work from the day one. We don't have to, I guess the best way to say is that we don't have to get ready because we're already ready. We're prepared. And that is a big difference in the planning process versus just the tax preparation process, which we do that, but it's a result of everything you've done. So if we're involved in everything you've done throughout the year, then doing the tax prep is not getting ready for it. It's just, we're just doing it. It's the end result of the planning process.
That's great.
Well, I think if I can chime in here, there's a couple of thoughts that I have on this to continue Bob's point with this. When we set up the plans, we are preparing for an audit.
Yes.
When Bob creates these things, he is creating every single strategy that gets put into place. Bob's mind is, I need to present in a court case against the IRS. So better than being there with you in an audit, if it ever were to happen in that unlikely event, we've done it already. So yes, we're there with you in that process. So I think that's important to keep in mind. You would not believe the companies that we jump into and the financial chaos that exists. Like they're already doing stuff that is actually risky, that actually would get them in trouble. They're already doing that. And a lot of times it's not even, they don't even know it.
Correct.
I mean, they're commingling funds. They're making personal purchases through their business account, that kind of stuff. Like they're already taking these huge risks that they don't even know about. The stuff we do, we are actually preparing to defend in a court case against the IRS. So it's beyond like audit preparation. I think that's a really important thing to point out.
Yeah. And Joe, it's kind of funny because I've actually talked to CPAs and I've been on conversations where we're doing the tax planning and the client says, well, my CPA who's on the call, the Zoom call, said that I should just do everything through my corporate account, all my personal, all my corporate, because it's easier for them to dissect and segment it when they're preparing my taxes. And I don't say anything on the call because I don't want to disparage some tax professional, but offline, the conversation is exactly what you just said, Joe. It's like, time out. You can't do that. And by the way, you're one of how many of their clients, and how are they knowing which ones are personal expenses and which ones are business expenses? Because you went to Target. I think Target, you can buy office supplies at Target, but you also can buy a bunch of personal stuff from Target.
Right.
So what are we talking about here? And so I think that is one area where just the tax environment, because I'm a tax guy, I'm working out of my house, nothing wrong with that. But as a client, you're going to get the results of that as well, right? Just like if you're running your practice out of the back of a van.
Right. Maybe nothing wrong with it. Might be good medicine.
Yeah,
but I think it's really important. People really need to keep this in mind. And Aaron, I don't know if this is coming up in other questions, but people say, "Oh, is that risky? Is a strategy that you're going to deploy too risky?" Or I've talked with other CPAs and they've talked about strategies like that being too risky. I'm like, okay, you ask them. Mr. CPA, how much of my tax bill are you willing to pay for me? Because as a business owner, as a doctor, you're already taking risk in the world. Any business owner is taking risk, and it's about mitigating that risk. So is it as clean and vanilla and boring as their strategies are? Nope. We are tax strategists. We're pushing things. We know where the edge is, and we go all the way up to the edge. We don't go a centimeter further.
No need
we
to.
go up to the edge, and we know where the edge is. The problem with your CPA is they don't know where the edge is. They don't know this stuff.
Yeah.
So they're like, I'm going to stay back as far as I possibly can so as not to risk this. Awesome. Thank you for doing that. And how much of my tax bill are you willing to personally pay?
Yeah.
Because I'm not willing to do it anymore. I mean, that's where people get to.
Yeah.
So that's kind of the first point is we're preparing for an audit from the beginning. So we start all of our strategies with that. The other thing, and Bob, you shared this with me because, of course, I'm not only with the Hair Club for Men. Not only am I the president, I'm also a member. My hair works for today. So I was a member before I joined Terra Firma in leadership. And these questions did come up. And Bob, you shared something with me one time that really, it kind of blew my mind. You said, Joe, the IRS rounds to the millionth, like to millions. So your piddly little few $1 million that you're so worried about, they're just looking at numbers. They're looking at all these statements that all it is, they're just financial statements that come into them. So you thinking you're eliminating $200,000, $300,000, $500,000 in income tax, that's not even a rounding error for them, let alone like something to pay attention to. So I think, we are all the center of our own universe, but we are not the center of the IRS's universe. And truly what the strategies that we're deploying, as Bob said earlier, and I know this will come up in other conversations too, but what we're doing with that money, we're not telling you go buy a bigger house or longer vacation or fancier schools or boat or whatever. You're using this to build business and to fund, your future wealth. That is all kosher and copacetic in the eyes of the IRS. You taking care of your future self is somebody else they don't have to take care of down the road. You employing more people means that you're generating more tax revenue. All of this is designed to enhance, like this is all designed to build America, to do everything well, not just like take for yourself.
The best way to avoid an IRS audit is grow your business, because then you have to hire more employees, and you're going to have more money, and you're going to have to put that money in other assets, and you're going to grow other assets, to your point, Joe. And the more assets you have, the more you grow, the more of the tax code you get access to. You don't get access to all of it right away because you don't qualify for all of it. It's still there in the tax code, but it's like a video game. You got to earn that next level. And so sometimes the best place to invest your money is in your business. And we will tell you that. We're not going to go tell you to go start a pension plan because there's a tax benefit of it. When we think, you know what, we need to plow some money into a marketing strategy in your business. Let's grow your business by another 100,000. Then here's how we can move the needle for you. Right? We're not going to tell you not to do something without a solution to do something. Right? We're not going to say, "Oh, doctor, that's a strategy." No, we're not going to do that strategy. Like you get now, right? You get cut off. No, we're not going to do that. No. We're like, maybe not right now, but here's what you can do. Or but here's how we do it. Right. That's what. Right. If you're as a doctor, you're treating a patient, and you're not providing solutions, you're not going to have a lot of patience. Right? You may be working medicine out of the back of a van. So anyway, so that's why that was a bonus question, because that does entail a little more detail in some of the answer, because of it, mainly more explanation to the answer to that bonus question. So.
And that was a ton of good points just on that first question. And the next two stay in the same vein of my CPA, because my CPA comes up all the time. And we are not here to, speak badly about accountants. Like, they have a job to do and there is a role for them. But at some point, as your income grows, you often outgrow your CPA, and that's okay. And so the next question, and you touched on it a bit, but how are you different from my CPA?
Well, I think the biggest thing is that we're planners. right? We're planning. We're looking to help you grow your wealth, and you can't save money on taxes, meaning you reduce your tax liability and grow your wealth. They go hand in hand. They're fraternal twins. Mom and dad are the same. We're of the same DNA, but we born at the same time. We just don't look alike, right? But we're hooked at the hip, so to speak. And the reason being kind of goes back to what I said a little bit earlier, is that the more you have, you reach that next level, the more you access the tax code. So Joe made the comment is that, hey, we're not going to help you in a situation where you can go buy a boat, or you can go buy an RV, or you can go just spend money. No. If you have 30 to 40% more of your money to put to your wealth, meaning that's the tax liability reduction, to put to growing your wealth, how much quicker can you grow your wealth? It's basic. If you have more, you make more. This is why everyone's like, oh, the rich keep getting richer. Well, no crap. They've got more. And they know that they can hire people who understand the tax code and the legal system to help them keep more. They're not doing anything illegal. They're doing everything legally.
Mm-hmm.
And that's why when Joe said we go up to the edge, well, you don't even need to go over the edge. You just go a little bit farther than where you're at now. You have more, you make more. And then you get to opportunity to get to the next level. The more assets you have, I said the best thing to do is grow your business. Why? Because now you have to hire somebody. Now you've hired a taxpayer. That means you can actually pay less in taxes, right? As a business owner, you're not required to pay taxes if your tax return shows that there's no tax liability. You don't have to make donations to the government.
Mm-hmm.
It's not. Nobody makes a donation. And you're not even required to pay taxes. But don't pay taxes, and you'll see what happens. So, so it's kind of it's like the secret menu at a restaurant. You pay it, right? But the point is that you really need to focus on how to expand that next level. And a lot of times when you bring on a CPA, you're new to practice. You don't know what to bring on. You don't know how to interview a CPA. Oh, you can do my taxes? Awesome, you're hired. I don't want to do it. You can do it? Hired, right? Mm-hmm. And all of a sudden, 3-5 years later, you're making more money, you've got more stuff, and your CPA or your tax professional is still doing the same thing they did 5 years ago. Well, you're not the same person anymore. Why should you have the same thing done? Yeah. Your plan should evolve with your evolution, and your plan should force you to evolve with your evolution, right? If I want to lose weight, I got to set some goals and I got to do something about it. And by losing weight, that pushes me to other goals to do other things. Well, now I don't want to just lose weight. I want to look a little bit more toned in the shirts I wear. So you change your goals.
Yeah.
Right. So did I answer the question?
Well, yep. I want to add something here. Maybe a shorter response to this is
please.
A CPA. Although I do think that little bit about the rich getting richer, that's got to become a meme. Bob's little voice that goes with that. The main difference is like a CPA, a certified public accountant. Their job is to make sure the correct numbers go into the correct boxes. Mm-hmm. That's their life, and it's all focused on what's already happened. Mm-hmm. It's all focused behind you. There's a reason why we have a rear view mirror in our cars, but it's smaller than the windshield. We are looking at the windshield as planners. They are looking in the rear view mirror as, certified public accountants. And although they are able to do taxes, for many of them, that's not their specialty. They can do them, but it doesn't mean they're great at doing them. And it certainly doesn't mean they can plan for you. So that's, I would say, the biggest difference is our exclusive focus is on your future, out the windshield. How do we make good decisions now looking forward so that when we get there, the rear view mirror looks proper?
Yeah. When we look to buy a CPA practice, I look for how much of the revenue, how much of the business is done through the bookkeeping and the accounting side of things. And the reason being, it tells me a couple things. One, they have more business owners, okay, that probably aren't getting tax planning. And what it tells me also is that in that process, in that understanding, if they have more business owners, the business owners are looking for more, right? If I'm going into a CPA practice and 80% of the revenue is generated through tax returns, then I know they're not providing any advice. They may not have a lot of business owners, and they may be a CPA, but they don't know accounting because all they're focusing on is individual taxes. So there's a big difference, even from our perspective, when we're looking at practices. And so, how many of you are in that tax practice? Have you ever asked your CPA how many doctors do you work with? And not only how many doctors do you work with, how many of them are practice owners? Or, compared to your whole book of business, your clientele, right? Because you may be the only doctor. Now, whose fault is that? It's not the CPA's fault. That's your fault. You didn't ask that basic question, which you're asking us, and we tell you, right? We only work with doctors, right? So, anyways, next question. Let's do it.
Yes, and it rolls right into the third, but it's often a separate question, and it's, why doesn't my CPA or tax attorney know these things? And I will add to that, this comes up where with business owners particularly, they've said, well, I've been proposed these different strategies, but my accountant doesn't like it. My tax attorney doesn't like it. And I think we've been through this where we're meeting and they're like, well, we don't get it. And so, why don't they know it? And why are they hesitant to move forward with these things?
Well, biggest thing is they're not planners.
Yeah.
Not planners. I mean, at the end of the day, a tax attorney, it knows the legal aspect of taxes, but not the planning aspect of taxes. And I will tell you, when we have sat with tax attorneys, Joe, you've sat in those conversations before, and we sit with people who understand taxes and we explain some of our strategies. They go, oh, wow, that makes a lot of sense. Yeah, okay, yeah, no, I like that.
It's like
they had never heard of it
their minds explode.
Yeah.
And it's like and if I can chime in with this,
of course,
it's like anything else. Why don't you know something that's not your specialty?
Right.
I don't know, because you didn't study it. You didn't learn it. It's a different beast. But Bob, you're exactly right. When we do have those opportunities to sit down with truly knowledgeable, especially on the tax and on the legal side of tax things, what Bob has put together on the tax side, the foundation goes deep. It's like, this is not just some wackadoo like thing that Bob came up with. Like, he'll go down to specific IRS tax code. And funny enough, for many of the strategies, those strategies are actually the examples that are used in the IRS tax code. The reason this came together was because Bob started studying the tax code. And so it's like, and as he's said in numerous other videos, they leave breadcrumbs along the way. All he did was follow those breadcrumbs, literally the examples that they use, and discover these pathways. So I would also say, like, for anyone, we have a lot of supporting documentation. We have entire courses that are built around some of these strategies where Bob goes full nerd mode and will go all the way down in like below the weed level. And so we'd invite those people who have tax attorneys who don't agree with the philosophy. Cool. Challenge us on any of it. Like we will debate you on any aspect of this. So go through the course, understand what you're talking about before you just say no, because I think they're saying no because they're afraid, because they don't know where the edge is. They truly don't. And so anything even close to it is scary.
Yeah. And I think there's times too where they've seen enough to where they probably just stick with the basic stuff. It's easy for them to bill hours. It's easy for them to do whatever they do as an attorney or as an accountant. And are you okay with them billing you hourly for their research? And so most of the time they say no, or not to do that, because they know that you are, I hate to say this, you may be too cheap to pay for their $4.50 an hour or $5.50 an hour for them to do the research, and they don't know what the research is going to look like. So I paid my tax attorney. I presented my strategies to my tax attorney, and I'll pay my tax attorney to talk to our prospective clients so they can hear from a tax attorney who works directly with me and knows what that is. So I'm putting my money where my mouth is. I eat my own cooking. And that is very, very important, and goes back to one of the first questions regarding an audit. Heck yeah, we'll be there because we're already planned for it. It's not a big deal. And IRS auditors and agents are designed to ask specific questions, like any other salesperson knocking on your door or any religious organization knocking on your door. There's specific questions depending on who you are, what you answer, and how you answer those questions of where they're going to take the conversation. That's where they're trained. Well, cool. So if we just have an answer and proof, we're not low-hanging fruit. We're the fruit at the top of the tree, which is the sweetest. Right? But it's hard to get there. We make it hard because we want the documentation, we want the proof. Let the IRS agent go to all the other low-hanging fruit. All your colleagues who say no or say, well, my CPA said no. All right. To Joe's point earlier, how much of your tax bill are they paying? 0. So it's a very easy, quick question to be able to say no to, because there's 0 responsibility for them, other than at the end of the tax season say, sorry, doc, you owe X amount. There's got to be something we can do. Yeah, I'm doing everything I can. And they're right. They are doing everything they can and where their expertise lies.
That's great. Thank you. So now leading into, okay, I like this plan. I'd like to move forward. But first, question number 4, can I talk to some of your members to find out their take and their experience? Can I talk to your members? That's something that gets asked.
No. What other questions do you have?
Erin asks us with a big smile because she knows, she's like, okay, here comes the floodgates. How's he going to respond? We're recording this.
Honestly, that's the best short answer. No. What other questions do you have? That's not members don't engage with us so that they can spend time to be part of our sales team.
Yeah.
Like that's one of the most absurd things. And I think this taps into a deeper psychological thing, which is people need to feel comfortable receiving enough data points to make a good decision.
Yep. And
making a decision. I mean, I can't overstate that enough as a business owner. What kills so many businesses, most businesses, or I would say more businesses fail through indecision than poor decision.
Correct.
And it's because you sit in this place of analysis paralysis. It's like, well, if I just get one more data point, then I'll feel comfortable. Talking to another member, which, by the way, we're only going to introduce you to people who would be our raving fan advocates, right?
Yeah.
So if we did say yes, they're going to sing our praises to the high heavens.
Yeah. The question should be, can I talk to any members that you don't work with anymore?
Right. Which
I
also
want the disgruntled. I want the thumbs down and the 1-star people. That's really what you asked.
Right. And I always get a quick, because this comes up, by the way, this is not just at Terra Firma, this is at most companies. You might even deal with this, doctor. Like, can I talk to someone who's had their hip replaced by you? Like, no, it's such an absurd thing to request. And it's because as a human being, you need to be more confident in receiving good data points, enough data points, whatever those data points need to be, and making a decision.
Yeah.
And we tried to make this as no-brainer as possible. I don't know if we're going to have this forever, but our discovery phase, which is the first phase in membership, is fully refundable. If you don't like what you see at the end of it, we will give you your money back. And we do that because we want to invite as many people in as we can if we think that we can help them. But when it goes through discovery and we uncover, hey, there's not enough savings to warrant what our fees are going to be, we refund their money.
Yeah.
So
minus my time.
Right.
100% of, and if you paid by credit card, we don't minus out the credit card fees.
Right.
You get your money back. And,
right.
and I think that's really important to understand, is that we're not going to give your name to anybody else. And I know in the doctor-to-doctor community, the P2P, the physician-to-physician is a huge referral network. It's this club of men and women who trust each other because you're doctors and you're kind of built this arm in arm wall but yet you guys still make poor decisions. right? Which is why you've made enough poor decisions now. Now you're at a point when someone says, yes, we can do this, and the dollar amount is larger than you've ever seen before. And we've going through this conversation, and you're still saying, I don't believe it. At the end of the day, we want you as a member if you qualify. We're not going to beg you. We don't need you. We want you. We don't need you. There is no hard sales tactics. Our process and what we do has been thought out of to meet you where you're at. It's why we do the cash flow recovery. It's why we have these conversations. It's why Aaron spends time talking to you and our team talks to you about stuff, answering your questions. We don't say you get 3 questions, that's it. It's like you get 3 wishes once you rub the lamp, right? Poof, done. No, we'll go through this due diligence. But in the discovery, like Joe said, is we can't help you. We can't help you. We had one individual right in the beginning. I told Aaron he's borderline, but I like him. And they're just kind of getting started. He worked his tail off to get his wife through medical school, did really well, very successful himself. Now she's in practice. She's making a good money. He's trimming back as how hard he was working, going to do stuff that he wants to do now. And so they were kind of in this transition. And so they were kind of borderline, but I liked what they did. I liked their story. And so I told Aaron, hey, I don't think they're going to join us, but let's make the offer and we'll even discount it. We don't do that anymore, but we'll even discount it because if you're not a good fit, there's no reason to discount it because you're still not a good fit. Right? And what ended up happening, Aaron, doesn't mean that they're bad people or anything like that. What ended up happening?
They, after much deliberation, they decided they weren't at a place where they could move forward right now.
And we kind of
did they get value? So that's the thing.
Huge.
Did they get value in that? I think even I saw some of the messaging. It was almost like he was pained to even ask for that money back.
Yeah.
It was because we had poured into them. And I want everyone to understand this. We will pour into you. We believe in you. And so we're willing to put our money where our mouth is. So when an offer to join our membership is extended to you, I would recommend that you take that up and ask how many times you can take it up. We are going to pour into you. If the end result is, hey, we can't help you, that's okay. We'll refund your money, but I promise you will get a lot of value in that process because we're going to give you 100% of what we've got.
For sure. Okay. Question number 5. And this is a question that is both voiced and I think just implied based on the action or inaction of people. So question number 5 is, how do I know what you're saying will happen come tax time will actually happen? Because again, we show them this is our fee and this is the huge amount of money that you're going to save on your taxes. It literally is a no-brainer.
Let's first change it. This is not our fee. This is your investment to get a return on your previous poor advice that now you're getting expert advice to get you a higher return than what the investment is. Okay. And so I think a lot of doctors think it's a fee, it's a cost and that sort of stuff. And we actually set it up to where it ends up being a deductible expense because you're hiring professionals to do stuff. So it's a business expense. So you're also getting we just created your first deduction. Your first tax strategy is to hire us. Right? Can't be any different than buying equipment or buying a new car like your CPA keeps saying, right? So our investment is very, very important. But to kind of your point though, Aaron, is that our process is very important. And what a horrible business model if we lie to you in the very beginning and we can't do what we say. Holy cow, in a industry that is P2P, knowing how focused you guys are on talking and sharing, and this is a great business model. Yeah, we're just going to, you know what? It's always great to go into a relationship and lie. I apologize for the sarcasm, but I want to express the silliness of that. Someone has to say it, and I'm going to say it, because you need to hear it, though you may not want to hear it. Stop acting childish. This is a big boy, big girl decision. This is your life. This is your hard work. You gave up a freaking decade of your life to pour into us, unhealthy people who need your help. And here we're trying to pour into you and help you buy some of that time back by reducing and offering advice that you can't get anywhere else or haven't yet. And you're worried about what we're saying is true? So I think I've shared my my emotions on that because it's a kind of offensive to be 100 honest with you, if I went to you, doctor, and you gave me a treatment plan, I go, oh, how do I know this is gonna? How do I know I'm going to lose weight? If I do all this stuff, how do I know I'm going to lose weight? How do I know my hair is going to grow back? It's just silliness, just silliness.
And it's because the tactics that we're utilizing, we are familiar with. Like when I walk into this room and I turn the lights on, how do I know the light's going to turn on when I turn the switch on? Because it does. Like that's what it does. And I've explained with some of our members on very specific strategies. They're like, well, how do that same thing? How do I know this is going to work? I'm like, I don't know how else to say this. 2 + 2 = 4 every time. I don't care what anyone says. 2 + 2 = 4. We have created this strategy that when deployed is going to cause this to happen and cause that to happen. Therefore, next year, you don't owe that money that you did the previous year. So it's just, Bob, I think your point is really excellent. It'd be like somebody coming to you if you're a surgeon and you do this every day, day in, day out. And I'm sure there are people who come to you that maybe this is why this question comes up with doctors, is because it's like maybe the medicine that you're practicing is more trial or you're cutting edge. And so it's like people might come to you thinking the same thing. Well, how do I know this is going to work? And maybe your answer is, I don't know, but we're trying it because this is a practice, right? They still call it a medical practice, right? So maybe you feel like you can't project the same way that we can. What we do is based on math. I mean, it's really, really simple.
I was going to say, I think so often there's a lot of good comparisons between what we do and the medical industry. But in this, like when Bob says, well, how do I know my hair is going to grow back? Actually, it doesn't work the same for everyone. It might not grow your hair back.
Right.
But we deal in numbers and it's very black and white. Like there's not like we think it's going to work for you. No, it's going to work because this is what we do.
Which is why we give in our discovery 100% money back guarantee, at least right now, right? And in that discovery, at the end of discovery, the presentation and what we've developed for you, we walk through how we're going to do it, where we're going to do it, where in the tax return it affects you. Aaron's been on these calls, and just in my quick little half-hour presentations, I get like nerdy where it's like, whoa. And I do it purposely so you understand the credibility of what we're pouring into you, and you've never heard any of this before. And it's just basic stuff for us because it is basic stuff that everybody else in my industry should be doing. But they don't because the model's broken. And that's okay. You now have an opportunity to unbreak it for you. This is your situation. Not the doctor that you meet up in the cafeteria all the time asking his opinion. It is math. And one of the YouTube guys I watch, he's a construction guy. I love what he always says, math don't lie. And it doesn't. Right. It does not. And math is so ingenious that they couldn't use numbers anymore. They started using alphabet. Right? I mean, it's like formulas you look at some of the stuff and like, I don't even know what that is. It's just, it's crazy. So it is 2 + 2 = 4. And in our process, the discovery process, we're going to tell you your 2 + 2 = 4. Or we're going to say, you're not 2 + 2 = 4. You're 2 + 1 = 3. We can't help you.
Right.
And here's why. So right now we can't. But here's what you may want to start looking at doing and some decisions that you need to start making to get to this point where 2 + 2 is. We'll still pour into you because we want your success, right? It's not just, sorry, we can't help you.
Yeah.
Done. By the way, a lot of that, the phone.
A lot of that comes down to like when oftentimes we work with high W-2 income earners who are not yet business owners. And I think it'd be awesome to record an episode talking about like, how do I transition from being really owning a job to owning a business? And I won't call it like you're not a solopreneur. Usually you have like front desk staff and people who are helping support you. But even when you own your practice, how do I move from being like the single solitary doctor to having a team of people? So I think that'd be a really good episode to record. And I think this is interesting. Every week we sign off this episode by saying what? Aaron, how do we sign it off?
We say, until next time, go be a wealth maverick.
So go be a wealth maverick. What the heck does that even mean? I'll tell you what that means right now. If you're not working with Wealth Maverick, you're missing out on a major, or if you're not working with Terra Firma, you're missing out on a major portion of that. You want to be a Wealth Maverick? Come work with us. We'll show you the way. Otherwise, you go figure out how to be a Wealth Maverick. That's maybe how we should sign it off. Go figure out how to be a Wealth Maverick, or give us a call and be a Wealth Maverick.
Yeah. And let me just lastly add this comment, and then we can wrap this up if you want, Aaron, or we can keep going. I don't care. I can keep going. This is for you, and we are open and welcome to questions. That's why we recorded this video. That's why we have all the other content that we have, this episode and all the other episodes, the other content, because we understand questions are part of the learning process. So we're not saying, and please, hopefully it doesn't sound like some of my answers, though passionate, aren't saying it's a stupid question. What I'm saying is that these questions have a simple answer to them. It's a difficult question for you because of maybe your experience and your situation. So continue to ask questions. So you watch this and you're like, hey, these are great answers. That leads me to some other questions and I want more clarity. Mm-hmm. That's due diligence. You're a scientist. We want and we welcome that. But at some point, you need to make a decision. To Joe's point and other episode points that we've made is that indecision will break that financial house. Decisions build your financial house. Even if those decisions end up in situations where it doesn't turn out as successfully as we think, it was still a decision to learn something, which is why your practice is called a practice. But ours is math, and we're able to understand that if 2 + 2 is 4, this situation occurred, we could have actually gotten 6. How do you 2 + 2 = 6? Well, that's what happens when you save money on taxes and you have more money to put into the equation. 2 + 2 can be 6. It's accounting. There's things that the government allows us in accounting guidelines. Does that make sense math-wise? But they give us some bonuses like a video game. You can level up without going to the next level. You can be more powerful as a player because you found these bonuses. Okay.
I think we found a little bit of magic. We need to go back and instead, just in your mind, doctor, go back every time we said 2 + 2 = 4, change that to 2 + 3 = 5, right? So 2 + 3 = 5. It equals that every time. What we do is we multiply it. So 2 × 3 = 6. So 2 + 3 = 5. But we're gonna work on multiplying.
Boom!
I love it.
Boom! Drop the mic.
And you guys are like the kings of analogies. I
Go
love
be a
them all.
Wealth Maverick.
But I really think the getting to the edge, the accountant being back here, like I don't want to go to the edge, and we hold you by the hand and we take you to the edge, and it's like, where is the view the best, the most beautiful? It is at the edge. We're not going to go beyond it, but we're going to take you right there to get the best possible view. So thank you both for answering those questions so well. Doc, if you're just getting to know us, or perhaps you've met with us before and you're ready to make that decision, I really hope that this Q&A has helped you. We would love to talk with you further and work with you. So until next time, thank you for listening, and go be a Wealth Maverick.